Hello and welcome there, you wonderful finance-savvy creatures. Buckle up because we're about to embark on a wild ride through the thrills and spills of central bank digital currencies, here on Open Bank of America. Central bank what, I hear you ask? Well, don't worry, all will be revealed. In the fun-packed agenda ahead, we will go headfirst into the eye of the financial storm, unveiling the mysteries of wholesale and retail CBDCs. It's a bit like trying to pick the best flavor of ice cream at a gelato shop. Complex, yet intriguing. We'll then whisk you away to Europe not for a romantic getaway, but to showcase some trailblazing European nations who are surfing the CBDC wave like pros. Buckle up as it's going to be a scenic ride. Next up, we're going to get our hands dirty with the grudge match of the century. CBDCs versus other digital currencies. It's a bit like comparing apples and oranges, or in our case, bitcoins and, well, CBDCs. Last but not least, we're going to dive into the crystal ball to answer that billion-dollar question. Does CBDC represent the future, or is it just a flash in the digital pan? So grab your snacks, get comfy, and prepare for an adventurous trip into the heart of digital finance. Let's get this party started on Open Bank of America. To kick off the discussion about central bank digital currencies, let's focus on the question, what is CBDC exactly? What is CBDC exactly? Innovation in the payment industry has always been an integral component of central banking. CBDCs, or central bank digital currencies, are another conceivable innovation. Central banking digital currency is the digital equivalent of a country's sovereign currency issued and backed by the central bank. Central bank money is merely money that is a central bank liability. In the United States, for instance, there are two types of central bank money: physical currency issued by the Federal Reserve and a digital balance maintained at the Federal Reserve by commercial institutions. Although digital money is not novel for Americans, online checking accounts, payment applications, etc., a CBDC differs from conventional digital money in that it is a Federal Reserve liability rather than a commercial bank liability. A type of digital currency issued by a central bank would provide a stable foundation for payment and monetary systems in Europe. A digital euro would reinforce the economic sovereignty of the Eurozone as well as promote competition and efficiency in the European payments industry. Central bank digital currencies. Unpack the mystery. In recent years, CBDCs have gained popularity as numerous central banks around the globe, over 100, have investigated the potential benefits and risks of creating their own digital currency. CBDCs are currently not broadly accessible. Multiple nations, including China, the Bahamas, and the European Central Bank, have begun testing or implementing them. The idea of central banks creating digital forms of currency for public use is a logical extension of the issuance of corporeal currency. Through the wholesale payment system, banks have had access to digital forms of central bank money for years. Transitioning now to another intriguing topic, let's dwell into the world of digital currencies. Specifically, we will examine central bank digital currencies, a burgeoning area of interest in the financial world, particularly in terms of its wholesale and retail variations. In essence, a CBDC is a type of digital currency issued and regulated by a country's central bank. Its purpose is to function as a digital equivalent of the country's physical currency. However, the way CBDCs are structured and distributed can be different, hence the terms wholesale and retail. Wholesale CBDCs are specifically designed for use by financial institutions that hold reserves at a central bank. This type of CBDC allows these institutions to execute transactions with each other using digital currency, possibly improving the efficiency, security, and speed of such transactions. On the other hand, retail CBDCs are intended for the general public. They allow individuals and businesses to hold digital currency accounts directly with the central bank, possibly eliminating the need for commercial banks or providing an alternative for underbanked or unbanked populations. With a clear understanding of CBDCs as a whole, let's narrow down our focus further to exclusively explore the unique aspects and potential implications of wholesale CBDCs. How does wholesale CBDC differ from retail CBDC? Wholesale CBDCs are tailored specifically for application by large-scale entities like financial institutions and substantial corporations. These digital currencies are generally utilized for executing interbank settlements and managing sizable transactions. The benefits of employing wholesale CBDCs include the potential reduction of associated transactional costs and risks, and the bolstering of overall financial system efficiency and robustness. What is the difference between CBDC wholesale and retail? Wholesale CBDCs are specifically designed for utilization by large businesses and financial institutions, commonly being applied in interbank settlements and hefty transactions. They hold the potential to cut costs and risks tied to such transactions while boosting the effectiveness and resilience of the financial system. Retail CBDCs, on the other hand, are accessible to the everyday consumer for typical transactions, such as buying goods and services. They could drive financial inclusivity, especially for those who are unbanked or underbanked, and offer an alternative to physical cash. Besides, these CBDCs can stimulate innovation in payment systems and diminish the risks linked with digital payments. Central bank digital currencies. Unpack the mystery. CBDCs could have both wholesale and retail versions, with the former meant for financial institutions and the latter for the public. Based on the nation's specific needs and goals, the central bank may decide to issue either of the two types. Both variations of CBDCs offer advantages in terms of risk management. For instance, a wholesale CBDC can present a secure and consistent settlement method, thereby minimizing the possibility of liquidity shortfalls and bolstering financial system stability. Furthermore, CBDCs, as a replacement for currency, are more secure than cash as they're less prone to risks like loss or counterfeiting. Now let's pivot our discussion to focus on a geographical perspective, specifically the nations within Europe that are making strides in CBDC production. We'll dwell into the progress, challenges, and strategies adopted by these countries in their journey to shape the future of digital currencies. European nations producing CBDCs. ABN AMRO has distinguished itself as the first European bank to register a corporate digital bond on a publicly accessible blockchain. It worked in conjunction with Bitbond and Fireblocks to leverage blockchain technology and create a digital wallet designed to securely hold a client's private keys. The Banque de France and the Banque Centrale du Luxembourg, the central banks of France and Luxembourg respectively, successfully conducted a test run of a wholesale CBDC utilizing distributed ledger technology. Both central banks jointly assisted the European Investment Bank with its Venus program by securely transacting an experimental CBDC, essentially a tokenized representation of the euro. During this trial, the EIB launched a €100 million digital bond using DLT, and the two central banks managed the transaction settlement using a tokenized CBDC. Having thoroughly discussed Europe's CBDC producing nations, let's now shift our attention to another compelling topic: the distinction between central bank digital currencies and digital currencies at large. This is an important conversation as it elucidates the unique characteristics of CBDCs and how they differ from other forms of digital currency in their structure, regulation, and potential impact on the financial ecosystem. CBDCs versus digital currencies. Cryptocurrencies, a category of digital currencies, are decentralized digital assets that leverage cryptography for security. They aren't backed by any government or central authority and operate independently of a central bank. Cryptocurrencies utilize intricate mathematical algorithms and decentralized networks to ensure transaction integrity. Bitcoin and Ethereum are two prominent examples. In contrast, central bank digital currencies are digital equivalents of a country's government-supported fiat currency. They utilize blockchain technology to verify and record transactions, but operate on a centralized network, essentially a controlled network. Although CBDCs and cryptocurrencies share certain characteristics, like their digital form and application in electronic transactions, they significantly differ in their issuance, regulation, and underlying assets. According to Forbes, Bitcoin, Ethereum, and Tether currently lead the pack among cryptocurrencies to invest in. However, CBDCs are largely a topic of ongoing exploration and dialogue among central banks and governments. Debates continue over the most effective versions of CBDCs and how financial institutions should leverage them. CBDCs aim to serve as digital counterparts to a nation's central bank issued and supported currency. While some professionals see CBDCs as a tool to boost financial inclusion, the efficacy of monetary policy, and the stability of the financial system, others express concern over potential threats to financial stability and increased supervision. The importance of CBDCs in the future will hinge on the findings of continuing research and trials. CBDCs offer several advantages such as diminishing financial crime and cyber attacks, improving financial inclusion, and reducing transaction costs. They also give central banks improved insights into monetary flows, aiding in the identification of financial crimes and fostering economic stability. Moreover, CBDCs could offer central banks additional instruments for implementing monetary policy. After exploring the differences between CBDCs and digital currencies, we now turn to a fascinating question that captures the essence of contemporary financial debates. Does CBDC represent the future? This question prompts us to examine the potential trajectory and impact of central bank digital currencies in our increasingly digital financial landscape. Is CBDC the future? The advent of CBDCs introduces crucial questions about the role of central bank money and the architecture of financial intermediation. Traditionally, central banks have limited the access to digital central bank money to banks and other institutions, with physical currency being readily available to the public. However, as the use of cash diminishes in some areas, there might be an increased demand for broader access to central bank money. Considering the current economic and financial structures have largely served the system well, any changes should be approached with prudence. There are notable advancements in the field, particularly in digital assets infrastructure. For example, Fireblocks seek to simplify the complexity associated with handling digital assets by enabling financial institutions and other market players to develop new blockchain-based products and manage regular digital asset operations. Other firms like Mykobo, Cashlink, Bitbond, and Tokeny offer blockchain-based platforms for creating, issuing, and managing and trading digital assets. For CBDCs to make meaningful impact, they must be implemented correctly. If successfully done, they hold the potential to revolutionize global banking and payment sectors. The benefits including bolstering economies, minimizing transaction delays and costs, enhancing financial inclusion, and streamlining cross-border transactions have led governments and central banks worldwide to explore their implementation. Simultaneously, there should be considerable focus on enlightening the public about the distinction between CBDCs and traditional cryptocurrencies, building trust in central bank-backed digital assets, and ensuring their insulation from crypto market volatility. In conclusion, central bank digital currencies, both wholesale and retail versions, are innovative financial tools that have the potential to dramatically reshape our global economic landscape. While wholesale CBDCs aim to streamline transactions among large financial institutions and corporations, retail CBDCs focus on broadening access to digital currency for the general public, promoting financial inclusivity. We also observe the European nations leading the way in CBDC development, a testament to the growing significance of digital currency in our world. The comparison of CBDCs and other forms of digital currency, such as cryptocurrencies, highlighted key differences, especially in terms of centralization, regulation, and underlying assets. As we further pondered whether CBDCs represent the future, it became clear that they have the potential to revolutionize global banking and payment sectors, offering numerous benefits such as reduced transaction delays, increased financial inclusion, and streamlined cross-border transactions. Yet it's also evident that there are significant challenges to be addressed. Understanding and managing the implications of CBDCs for financial intermediation, ensuring public education and confidence in central bank-backed digital assets, and protecting these currencies from crypto market volatility are all areas that require careful attention. As the world moves increasingly towards digitalization, CBDCs may very well play a pivotal role in shaping the future of global finance. However, their full potential and challenges may only be revealed through ongoing research, experimentation, and most importantly, practical implementation. Now, as we slide into the end of our digital money chat, a huge, monstrous, ginormous thanks to all you beautiful people for joining us here at the Open Bank of America channel. Your participation means we can keep talking about things like central bank digital currencies, and you can keep scratching your heads wondering why we find it so fascinating. But hey, whether you're a Wall Street guru or just someone who got lost in the internet and ended up here, we're super glad you stuck around with us. It's your curiosity that keeps us going and allows us to dive into these whirlwinds of financial wizardry. Remember, dear friends, to smash that like button, share our videos with anyone who'll listen or won't, we're not picky, and subscribe if you haven't already. Seriously, it just takes one click, and it helps us make more of these thrilling adventures into the world of finance. Again, thank you from the bottom of our digital hearts for being a part of this wild Open Bank of America family. We can't wait to bring you more tales from the cryptocurrency. Until then, stay sharp, stay curious, and most importantly, keep laughing. This is Open Bank of America signing off. See ya!